Europe. How is gold doing there? Okay, gold is in the green, natural gas is in the red. Okay, cocoa is up, really. Palm oil down. So let me just explain what those things mean, or those colors. When you see green colors, you should understand that those green colors mean that the prices are up. And when you see red color, that means prices are going down, or the index is going down. So I hope you understand that. All right, let's quickly bring in our first guest to give us some perspectives into what's happening in the market place. Are we ready? Are we good to go with my first guest? Uchenna Minnis is the managing partner, Westwood Investment Consultancy Services. Hello, Mr. Minnis, and welcome to the program.
Hi, how you doing, Nancy? Thank you for having me.
Thank you for joining us. Where should I start from? Let's give me an analysis of last week's trade. 4 trading days, market depreciation amid the FBN news, the reconstitution of the board. Has the market tried to recalibrate from that brouhaha that we saw a few days ago?
Yes, I think that's basically where we are. I think that kind of decision, the should I say the sudden shift in, should I say normancy, has sort of put the market at ease, really. Right now, what we're seeing driving the market at the moment is basically the general, should I say, sentiment of foreign investors about our economic activities, how oil pricing is looking on the back of that, and the foreign exchange risk, really, the downside pressure the naira is facing against the US dollar. So, should I say, the combination of all of these macroeconomic factors just gives a general idea of what our markets are looking to do, basically.
Speak to me about what the markets may be sensitive to this week.
If we really want to, we don't have any major macroeconomic decision into this week. We have a very short week. I think Thursday and Friday is a non-trading day, given the Muslim holiday. So we might get to see some investors just do some profit taking into the end of that week, maybe Wednesday, and that's basically what I think can be a significant drive in the market. But generally speaking, I think we have very mute week in terms of data.
Okay, let's talk about other markets like the money markets or the fixed income market. Okay, let's talk about the money market. I talked about it earlier that we're expecting 60 billion naira worth of OMO bills maturing at tomorrow. How do you see that playing out?
Well, the OMO market from a central bank perspective, from the, should I say, financial engineering perspective, has been a very key driver in terms of the stability when it comes to the naira value against the US dollar. So it is the central bank's sort of precious jewel at the moment, and the maturity into tomorrow. It would, I don't expect any significant yield on these bills. I think that the central bank is really being protective of fixed income instrument, given the fact that it is a key path to getting foreign investment into the country, given the fact that we're having significant issues with our oil revenue at the moment. So I think that is something the central bank would really continue to protect.
You know, we're still in a world of uncertainty. Do you believe that, or do you think that the uncertainty that we saw in 2020 have been easing? If you believe that, tell me why. And if you think that our world or the economy is still uncertain, where do investors go and search for yield at this time? Where's the juice?
Right, Nancy. Well, I'm in the business of looking at risk. There's no time I wouldn't look at risk. And honestly speaking, what we saw with 2020 and the pandemic was very spontaneous and uncharted, really. We are still currently in an uncharted territory when it comes to this variable. Now, to say all is in the clear, that would be very premature. I know there is significant rollout of vaccination across continents. However, we can can see what is happening with India. We can see how the pandemic can literally go from a 10 to 100, So, and that is not to say it can happen anywhere at the moment. So, to say that this we are undeclared, that would be premature of me to say. However, when it comes to looking at market participants and investors, basically, what I would say is to be very cautious in terms of how they've been exposed to high yielding asset, risk-based assets, really, given the fact that when we get any sudden shift in risk, you will expect this high yield asset to take the beat. So I think the fixed income securities are still very, very fair place to play. Right now, we can see gold underperforming compared to other precious metals. And on the back of that, when gold lags like that, you expect it because you're seeing a lot of, should I say, risk averse and risk seeking rather into high yielding assets. So gold and some of these precious metals are places where investors can look to just go in terms of caution and have that as a store of value, given its own intrinsic value as a precious metal, Nancy.
If we take a look at the upcoming MPC meeting, I mentioned it earlier, we're expecting, I think, the third MPC meeting this May. Precisely, I had to check my date quickly, 24th and 25th, except the CBN changes it. Monday and Tuesday, the last Monday and Tuesday of this month. How do you see that playing out? Especially that we've seen that inflation over the last few months have ticked up. From the last MPC meeting in May, inflation is at 18% right now. What kind of decisions are you expecting? And how is inflation even playing into equities?
I think right now, I think our central bank would be very cautious in being too aggressive in terms of in terms of their money policy play. And the reason is that we're still looking to come out of this very significant pandemic, and you don't want to aggressively use all your tools at the moment. And I don't expect a rate hike, despite the fact we're seeing inflationary pressure ticking higher. However, there might be some other easing, should I say, tools when it comes to probably adjustment to the CR and other things like that in that corridor. However, it's very important that right now most central banks are not too aggressive or too agile in terms of trying to ease their or tighten their monetary policy stance at the moment, and that's what I expect. I expect a bit unchanged policy look. And in terms of inflationary pressure, honestly speaking, if I want to be quite frank with you, Nancy, there is a bit of disconnect with what our macroeconomic conditions are really in terms of should I say inflationary pressure and what is being translated in equities, because there are very, very two major drivers when it comes to equities play, and that is oil pricing and the general feel of foreign investors as regards to our macroeconomic conditions when it comes to our foreign exchange rate, really, and naira against the US dollar, really. So I could say for now, it is not a significant factor right now to be worried about when it comes to the equity play, Nancy.
So what should we be worried about?
Say that again?
What should we be worried about then? What should we be worried about right now?
Yeah. So basically, as I've tried to highlight, is really the general sentiment of our own economic and business activities. Really, there is still talk from the parallel marketplace that we're still facing a significant shortage of USD, and that is translating to what we're seeing in the naira play, and that pressure we continue to squeeze on foreign portfolio investment and even FDIs at the moment, and if we can't get that in check, people get to miss the should I say negative feedback loop that we experience with higher crude oil. It's not exactly good for us, really. And the reason why that is not the case is that, or that is the case rather, is that when you have such high surge in oil pricing, because we get to export our crude oil to be refined and then imported back in the country, we get to still burn our FX to access this petroleum product. It has some high level of counterproductivity. So for us, an extreme level of higher oil prices does not really translate to good merits in our economy, and that in itself has its own pressure when it comes to the naira and the USD exchange risk, and that just creates a general feel, because you see that also translate into our inflationary pressure, because we are literally an import-based economy, if you look at it from a real sector perspective, and that in itself is a pressure that continues to weigh down on our economic and business activities, Nancy.
Final question for you. What should smart people begin to do right now? What should smart investors do? Give me a sense of the kind of advice you give to your clients. What should smart people do now? Because perhaps it takes smartness to remain in this kind of volatile and uncertain investment space.
Yeah. There's a lot of I wouldn't really say smartness. It's just try to be caution and basically manage risk effectively, really. So I think we have a very relatively healthy fixed income space. The equities market's still not doing so bad, and on the basis of that, the NTB itself is starting to tick higher. It was in a very bad shape going into 2020. But right now, we're looking to some sort of comfort in that regard. So yes, I think fixed income space things that I can urge for our clients to get to jump on.
Thank you very much, Uchenna. Thanks for joining us today. Let's do this again sometime
Thank you.
soon.
All right.
All right, I've been speaking with Uchenna Minnis, who is the managing partner, Westwood Investment Consultancy Services. Let's quickly take a break to bring in my second guest, the Chief Executive Officer at Global Analytics. We'll be talking about the federal government's plans to slash salaries or harmonize. Let me use the language of the finance minister, to harmonize, and cutting the costs of governance. We'll be looking at that when we return. Don't forget to join us on all our social media platforms. Begin to send your questions right now, because I see that a lot of people are saying, oh, why should FG cut salaries when inflation is eating deep into our pockets? We'll be addressing that when we return.